Hey guys, what's up? Welcome back to another video. In today's video, I have a healthcare provider stock that is trading below intrinsic value per share, so they could potentially be presenting a good buying opportunity from a value investing perspective. And so in this video, I'm just going to talk about their business, talk about how they produce their revenues, look into their financial statements, and then end the video off with a discounted cash flow analysis and a competitor analysis just to see where the company ranks up against their competitors in their industry, in the healthcare industry. And so the stock that I'm going to be talking about is AmerisourceBergen. And we can see that this stock is up 14% over the last year, in the same year that the overall S&P 500 is down 14%. So they are beating the overall market, currently trading at $140 per share. And basically, AmerisourceBergen is a global healthcare solutions provider. So they not only provide healthcare solutions in the United States, but also internationally. And if I scroll down a little bit here, we can see that they specialize in distributing pharmaceuticals and also not just in human healthcare, but also in animal healthcare solutions. And so if I go into their financial statements right here, we can see this is their balance sheet, and this is their quarterly report for the third quarter earnings results for their company in their fiscal year. And so their third quarter ends June 30th, 2022. So it's kind of similar to the second quarter for other companies. But we can see right here that they had about $57 billion worth of total assets at the end of June 30th, 2022, which is actually down from the amount of assets they had on their balance sheet at the end of the last fiscal year in September 30th, 2021. And we can also see the vast majority of their business is financed by equity as opposed to liabilities. They have about $56 billion worth of total liabilities and only about $500 million of total equity. And we can see that the majority of that comes from accounts payable. So they're probably buying a lot of the costs of their goods sold on credit, which ends up sitting on their balance sheet as liabilities. And so that might be able to help them optimize their cash flow moving forward, because they don't have to pay their suppliers as soon as they're using those goods to produce revenues for their business. And so right here we see from their income statement that they've actually experienced some pretty big revenue growth year over year, from about $53.4 billion to about $60 billion for the 3 months ended June 30th, 2021 and 2022. And that's an increase of about 12.5% year over year. And this increase was primarily driven by a 120.3% increase in their revenues from their international healthcare solutions. So that segment of their business has been growing pretty rapidly. And then as far as their United States healthcare solutions go, that part of their business has increased 6% over the last year in terms of revenue growth. And we can see right here that their gross profit came out to be about $2 billion, up from about $1.8 billion in the last year. And if we were to break up this revenue, by the way, in terms of the revenue from the United States as well as internationally, about $53.4 billion of this $60 billion comes from the United States revenue, and then only about $6.7 billion comes from international. But like I said, international grew 120% over the last year, so that segment of their business is growing very rapidly. And we can see right here their bottom line net income increased pretty substantially year over year as well, from about $295 million to $363 million. So they obviously don't have very impressive profit margins. They had a top line revenue of about $60 billion, but then they had bottom line net income of only about $360 million. And most of that cost obviously goes into their cost of goods sold, not really from operating their business, but just from the actual manufacturing costs for their products. But that being said, they did experience a pretty steep increase in their net income year over year. And then if I go to page 8 right here, we can see their final statement that I'll be looking at, their cash flow statement. And we can see that their net cash provided by operating activities for the 9 months ended June 30th, 2022 came out to be about $1.5 billion, and that's down from about $1.6 billion year over year. And we can also see that they've been returning a lot of value back to their shareholders in the way of cash dividends and purchases of common stock. And so we can see that they had cash dividends on common stock of about $295 million, and they also repurchased about $248 million, which is up from only $82 million the last year or the last 9 months ended in the last fiscal year. So they are returning a lot more value to their shareholders this year as opposed to last year. And so right here, I did a discounted cash flow analysis to find the intrinsic value per share of AmerisourceBergen. And we can see I got these estimates from Yahoo Finance, and Yahoo Finance analysts are estimating that the growth rate for years 1 through 5 for AmerisourceBergen for the next 5 years is going to be about almost 10% per year compounded annually. So I was conservative for the next 5 years after that, and I put it at 4%. They had about $2.2 billion of free cash flow in 2021. They have a net cash against their net debt position on their balance sheet of about a $4.3 billion debt position, and they have about 207 million shares outstanding. And so with these metrics taken into account, their intrinsic value per share is about $142 per share with a 50% margin of safety of $70 per share. And so compared to their current share price, we can see on the market right now, they're trading at about $140 per share, even though they're up 14% over the last year. And so they are trading basically at intrinsic value per share right now if these estimates from Yahoo Finance are to be believed. So in my opinion, I might wait a little bit longer for the stock to potentially trade at a cheaper price before buying in, just so that I could potentially buy at a 30% or a 50% margin of safety. But that of course changes based on these metrics and based on the projected growth rate that anyone might use to value this company. But then on the right side over here, I did a competitor analysis to see where AmerisourceBergen stands against their competition in the healthcare industry. And I compared them against some of their biggest competitors, Henry Schein, McKesson, and Cardinal Health. And we can see that the profit margins in this industry are pretty abysmal for the most part. We can see that gross profit margins are around 2 to 4% usually, except for Henry Schein, I think that's pronounced, I'm not sure, which is they have a gross profit margin of almost 30%. And that interested me, so I wanted to see if this company was a little bit more lucrative of an investment than AmerisourceBergen. And so I ended up doing an intrinsic value analysis for their company as well. We can see they haven't had nearly as impressive of stock performance over the last year as AmerisourceBergen has. AmerisourceBergen is up 14%, Henry Schein is down 10%. But if I did an intrinsic value analysis here, we can see these are the estimates from Yahoo Finance, estimated to grow at about 8% over the next 5 years, $630 million of free cash flow in 2021, $1 billion of a net debt position on their balance sheet, 136 million shares outstanding. It's estimated that their intrinsic value per share comes out to be almost $60 per share, or about $58 per share. And so that means that right now Henry Schein or Sheen is basically trading above their intrinsic value per share. So from that perspective, it seems like although their gross profit margin is larger than AmerisourceBergen's, 3% to 30%, it looks like from a value investing perspective, they might not be presenting as strong of a buying opportunity as AmerisourceBergen, which is currently trading below their intrinsic value per share by about $2 per share. That being said, we can see that across the board, the net profit margins are also pretty abysmal in this industry at about less than 1% for all of the companies. And then return on assets, they are sitting at about 1% to 3% and then 7% for Henry's company. But based on that, I would say that in terms of investing into Amerisource, it's definitely an interesting opportunity because it's one of the few companies that's on the market right now that's trading below intrinsic value. But that being said, I would wait for them, in my opinion, if I was going to buy into them at more of a margin of safety. I'm not sure. It obviously depends on the kind of metrics that someone's using to value the company. But I'd love to know what anyone watching this video thinks about AmerisourceBergen. Is it a good buying opportunity right now? Is anybody else looking at it? Is anybody going to buy into it? Let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.